Hey everyone, welcome back to Corporate Decoder, the place where we dive into the sometimes murky world of corporate filings and hopefully come out a little bit wiser. Today, we're cracking open the latest 10K from Permian Resources Corporation. Now, I know what you're thinking, oil and gas, yawn, but stick with me because this report actually has some pretty juicy details about mergers, money, and a potential energy revolution. Or maybe just another year of the same old story. Let's see. First, let's talk about the big picture. Permian Resources calls itself an independent oil and gas company focused on getting good returns by responsibly developing their oil and gas reserves. Think of them as a major player in the Permian Basin, which is basically the heart of U.S. oil production. Their goal is to make money for their shareholders, and they plan to do it by being efficient, keeping their costs down, and being smart about how they grow. To give you an idea of how big they are, as of last summer, the market value of their stock held by regular investors was almost $10 billion. A big part of Permian Resources' story lately has been about getting even bigger. They've made some major moves to acquire other companies like Earthstone Energy, which closed in November of last year. These mergers are all about scale and increasing the amount of oil and gas the company can produce. The Earthstone deal added a huge chunk of land to Permian's holdings in the Permian Basin, about 223,000 acres. The goal is to make the combined company more efficient and profitable. Before that, they also merged with Colgate Energy Partners back in 2022 with a similar idea in mind. Now let's dig into what these guys actually own. Reserves, which is the oil, natural gas, and related substances still in the ground. The company estimates they had roughly 1,026,957 barrels of oil equivalent in proved reserves at the end of 2024. You can think of proved reserves as the amount of oil and gas they're pretty sure they can get out of the ground with today's technology and prices. A lot of this is in stuff they can get to right away, but some are in what they call proved undeveloped reserves, so you can think of them as needing more time to get it. The total standardized measure of discounted future net cash flows, about $9.3 billion. Keep in mind that isn't a market value. One thing that's worth keeping in mind is that the company's proved undeveloped reserves increased during 2024. This increase was mainly because of new discoveries from the company's drilling program, as well as acquisitions made during the year. In fact, they converted some of these undeveloped reserves into proven, getting some of the oil for which they spent almost $600 million. Okay, now let's check if all that oil and gas in the ground is actually getting pumped out. In 2024, the company produced about 58,276 barrels of oil, 220,900 million cubic feet of natural gas, and 30,636 barrels of NGL. Their average sales price for oil, excluding hedges, was about $74.87 per barrel. The natural gas price was not great at about 47 cents per MCF, mainly due to some pipeline issues in the Permian area. And it cost them about $5.45 per barrel to actually get the oil out of the ground, known as lease operating expenses. Speaking of selling, let's talk about commitments. The company has agreements to deliver a certain amount of NGL and natural gas over the next few years. For instance, they're committed to selling over 10 million barrels of NGLs in the next 4 years and 98 million MCF of natural gas over the next 7 years. If they don't meet those commitments, they could face some financial penalties. They also have a commitment to deliver a certain amount of oil, which ends in May 2025. The big question, of course, is what if Permian can't deliver these promised oil and gas? That brings us to the risk factors, which are what can go wrong. Number one is that the company is super dependent on volatile prices for oil, natural gas, and NGLs. A long period of low prices could really hurt their business. Also, their reserve estimates are based on a whole bunch of assumptions that might turn out to be wrong. If those estimates are off, it could affect how much those reserves are actually worth. It would also impact their ability to keep borrowing money. Another big risk factor for Permian Resources is their dependence on water for drilling and fracking. Restrictions on water use could drive up costs and limit their ability to produce oil and gas. There's also the risk of earthquakes and induced seismicity related to wastewater disposal, as well as potential environmental liabilities and regulations. And you can't forget climate change. New laws and regulations aimed at reducing greenhouse gas emissions could increase costs and reduce demand for the oil and gas that Permian Resources produces. And a lot of the company's debt agreements restrict the company from a lot of activities, which means the company may miss out on opportunities. One more risk factor. The company, as a holding company, basically relies on its operating subsidiaries like OpCo to provide it with cash, so if for some reason it cannot, then there's a problem. Okay, so looking at cash flows, we can get a better idea of whether the business is healthy or not. Net cash provided by operating activities was $3.4 billion for 2024, a big increase from the previous year. That's mostly due to pumping out more oil and gas and keeping costs down after the mergers. On the controls and procedures side, we have the usual reminder that if the company screws up its internal controls, it might not be able to report its financial results accurately, and then investors would lose confidence. But the word from the leadership is that everything is fine on that front, with an attestation from KPMG, their auditing company. One more thing to note, evolving cybersecurity risks could pose serious problems for them. So how are they handling these threats? Well, the Vice President and Chief Information Officer with 25 years in the field of information systems is leading the charge. They also do a bunch of security assessments, testing, and employee training to make sure they're prepared for anything. All clear then, right? According to the report, they haven't had any major incidents yet, but they know that the risk is always there. So what's the verdict? Permian Resources is betting big on consolidation and efficiency. The company really seems to be in a good position from where it is. But you can tell from the report that so much of this depends on the price of oil and gas. That will probably drive their direction. As of December 31, 2024, they appear to have a strong handle on their internal controls. But it is difficult to assess some of those risks without outside expertise, and it is a serious risk factor for all companies. Permian seems to have a clear vision for growth, which puts it in a decent spot for long-term success. The company's report isn't all good, but it appears well positioned. Now tell me in the comments what you think. Do you agree with my thoughts? What areas do you think Permian should focus on? Also, don't forget to hit that like button, subscribe, and hit the bell.